It's Friday, May 8th. I'm Brian Walsh, and welcome to This Week in Impact, where I talk with ImpactAlpha journalists and editors about some of the most interesting impact investing stories we've been covering. This week, I'm joined by editor David Bank. We'll discuss navigating the fear and frenzy at the annual gathering of global institutional capital known as the Milken Global Conference. Plus, how the ongoing conflict with Iran is increasing demand for renewable energy infrastructure, a boon for some private equity giants. And finally, strange bedfellows invest in a company using ocean waves to generate renewable power for offshore AI compute. That's all coming up on This Week in Impact. Hi, David. Welcome back to the podcast, and happy birthday.
Yeah, it was my birthday this week. Thank you, Brian. And it's been quite a week. I'm just back from Beverly Hills and the Milken Institute Global Conference.
Yeah, let's dig into it. That's our first topic here. The Milken Global Conference is where trillions of dollars of institutional capital gathers in that Beverly Hills Hilton. That's where the capital goes to see and be seen. Now, David, in a dispatch for us, you wrote that no one seems to know anything. What did you mean by that? And what did you hear at the conference?
Well, there was an undercurrent of that, unprecedented and, all kinds of words like that. And it focuses on some of the things that are just obviously in the news, like the war in Iran and what's going to happen to oil prices and oil supplies. Also, AI was just a recurring, topic of conversation, and what and the disruption that will bring both to financial services specifically and also to everything else. And then other things that have sort of taken a backseat, climate and other things. And you put that all together and, folks are worried about the concentration, the extreme concentration of value in the S&P 500 in what people are calling the Magnificent Seven. Folks are worried about, private credit risks and all kinds of things. So we put that all together and people are expecting, sort of profound or sort of fundamental shocks, maybe something beyond just the cyclical. And many speakers kind of called out the complacency of investors who've ridden this stock market and maybe haven't had to think too hard. And that when the shock comes, they may not be prepared. And they say the shock is coming.
Yeah, I was struck by a quote you flagged from the head of the International Monetary Fund who said, quote, "I don't know what the next shock is going to be. I just know it's going to come. And when it comes, it's always the poorest, the most vulnerable families and countries that take the biggest hit."
Yeah, and we've been seeing that already, obviously, with the oil shock, with the fertilizer shock, the food shock that's come down through the war, and there's other things that are going on as well. Like, for example, a big push now in private equity to get a hold of some of those 401k assets in people's retirement accounts. And so the thought is, hey, all the upside has been taken, but now, and just at the top, you'll bring in the poor retail investors and stick them with the bill as these guys go out. And frankly, I did come away with a sense that these investors are not that worried actually about these shocks. As citizens of the world, they may be, but as investors, they can play the volatility. There was a lot of talk about, how do you play distressed debt in this era of private credit risks? That the AI job apocalypse, that will boost profits and earnings. And in fact, corporate profits and earnings are actually up, and that's buoying the stock market. But there was kind of a sense of, that cartoon character who doesn't look down, that some big forces are starting to shake the economy and it's going to be a rocky road ahead.
Yeah, that Wile E. Coyote moment. And as long as you don't look down, you haven't fallen off the cliff. So tell me about some of the people that you've met here. And I know there are agents of impact that are scattered throughout the conference.
Well, that was interesting. There are folks, that we've been working with for a long time on community infrastructure, green infrastructure, and also things like broadband and other things. There are folks, emerging managers in Africa. Everybody's hanging around Milken to try to, get those coveted meetings with those LPs, those big institutional investors. I heard one woman that I was talking with say, I got to speak with CalSTRS, the big California pension fund. She, just because she met them at a reception. So those kinds of things do happen. I will say, say that the agents of impact, as we call them, were in the hallways, but less so on the stages, and that the sort of official program had now tilted quite a bit away from the kinds of impact and social progress kinds of themes that are to Milken Institute's credit, are part of their programming on their sort of foundation side, and they do a lot of good convening, and everybody seems to be a Milken fellow of some sort, but much less so in the sort of open discussion. And I would say much less of that in sort of just even the hallway conversations. People are very unabashed, for example, about saying they're now big into defense stocks and defense investments because that's a growth industry, in Europe as well as here. And they don't say that, particularly as either a warmonger, but certainly not also as a pacifist. It's just where the action is. And that was my overwhelming takeaway, is that these folks will look for something to do, as they say, in terms of finding investment opportunities. They don't particularly care where they are.
Because that's where the money is. That's why they rob the banks.
Yeah.
What were some of the surprises at the conference for you?
I had a terrific conversation with Majid Al-Suwaidi, and he's the CEO of Altera, which is a $30 billion fund of funds, essentially, although now they're doing other things as well, out of the United Arab Emirates. And Majid, as he asked me to call him, not His Excellency, was head of the COP several years ago in Dubai, and this fund comes out of there. And they've seeded investors like TPG and Brookfield to be more interested in climate investment opportunities in the global south. And they're trying to play a catalytic role as sort of an anchor investor to get these major investors to pay more attention to opportunities in the global south. And so they're trying to raise $250 billion or mobilize $250 billion by 2030, their $30 billion being the sort of catalytic part of that. And so it's a good example of oil and gas money, of being used to finance the green transition. I also, on the insatiable demand for energy topic, had a fascinating conversation with Francesco Scortino, and he's the CEO of Proxima Fusion, which is a German company. He's Italian, actually. And I learned the difference between tokamak fusion reactors, and stellarators. And tokamaks have been in the lead. They're simpler to build. But according to the stellarator crowd, and Proxima is in the stellarator crowd, stellarators over time will be more stable and will win out. And there's several other technical approaches to fusion as well. But there is a big push on and a kind of, I don't know, almost a Hail Mary kind of pass. If we can get fusion, that will solve all of our problems. We'll have the proverbial unlimited, too cheap to meter kind of electricity. It will feed, obviously, the AI boom, but also, desalinization and the electrification of everything. And so even when all seems lost on the climate front, maybe fusion will come in to save the day.
I feel like nuclear fusion is like Dippin' Dots, the energy of the future that's not quite ready for prime time.
That has been how it is, but so was AI for many years, you'll recall. It was always something that was on the horizon and never quite arriving, and then it arrived. And I think it's possible that fusion may be the same in 10 or 15 years.
I didn't realize that fusion had the different kind of technologies, kind of like Betamax and VHS, and we'll see which one wins out ultimately.
May the best reactor win.
All right. Well, you can read David's coverage of the Milken Global Conference on ImpactAlpha.com. There's also a link in our show notes. Later in the show, we'll discuss how the company harnessing ocean waves to generate clean energy for offshore AI compute is bringing together Peter Thiel and climate tech investors. But for now, we'll take a quick break. When we come back, how the ongoing conflict in Iran is increasing demand for renewable energy infrastructure, a boon for some private equity giants.
Hi there, Agent of Impact. This is Dennis Price, CEO of ImpactAlpha. For more than a decade, ImpactAlpha has been helping you find the alpha in impact. We've now built ImpactAlpha Edge to bring you structured data and market intelligence to help you move faster, invest smarter, and multiply your impact. ImpactAlpha Edge is designed to help GPs and fund managers raise capital more effectively, LPs and allocators find each other, and discover overlooked opportunities. Think of it as a purpose-built pitch book for impact, with the editorial judgment and network trust that no algorithm can replicate. Come check it out. Book a demo today. Learn more about ImpactAlpha Edge in our show notes.
Next up, the ongoing conflict in Iran and accompanying closures in the Strait of Hormuz have disrupted the global energy market, hitting consumers at the gas pump, raising costs for farmers trying to fertilize their fields, and harming low income people in markets around the world. But as Amy Cortese and Eric Stein wrote for us this week, for some big buyout firms and asset managers, the opportunities have hardly looked brighter. David, what are we learning about who's benefiting from this recent conflict?
Yeah, this past week was the quarterly earnings calls for the big publicly traded private equity companies like TPG, like Brookfield, and others. And so they get on the phone and talk about what the environment is. And Jim Coulter of TPG had the sort of quote of the week saying, "The Strait of Hormuz may be bad for many things, but it's good for our business." And what he mean really is actually good for their climate business. And he runs Rise now, and he's become a true convert to the climate transition. And they've raised something like $9 billion through April for their clean energy funds. One of them is the Global South fund that Altera had seeded. And because of the oil shock, anything renewable and local has been really going gangbusters, and sales of Chinese solar panels, sales of electric vehicles, anything that can give you some resilience and insulation from the oil shocks is really doing quite well now. So there is kind of a weird rebound effect of this energy crisis to the benefit of renewables, and Brookfield more or less said the same thing. And so one is just the prices, and then the other is sort of energy security and what people think of as sort of energy sovereignty and not being dependent on that supply chain through the Strait of Hormuz.
How durable are these gains for renewable energy? Is this just a blip because of the temporary kind of disruptions in the Strait of Hormuz, or is this kind of risk environment kind of additive for their bottom lines in the long term?
Well, yeah, you never want to, predict out too far, because there were times in the past when we had called the inflection point in the great climate transition and the victory of renewables. And then along came AI, in fact, and said, well, okay, we'll do renewables, but we will not decommission those coal plants because we need every electron that we can find. And so the comparative cost advantage of renewables, which was already cheaper than oil and gas in almost every case, is now incontrovertible, but that's a more favorable comp at 110 or $120 a barrel for oil than it was at 50 or 60. Nonetheless, it was even cheaper at the lower prices. So there used to be a thing where the greenies would argue against fossil fuels back a few decades ago, and they wouldn't get very far because of the cost advantages of fossil fuels at that point, and people didn't want to pay the green premium, and so as much as they might like it, they wouldn't really go there. And the green advocates were kind of on their back foot on economics. Now that's totally the opposite. There's a whole effort, as you may know, from this administration and others to kind of prop up the fossil fuel economy. But the economics on the green side are so much more compelling that they're on the back foot on the economics front. And so there is kind of a feeling that the tech cost curves and everything else are really flowing in favor of renewables. I think the sort of great caveat there is we may get this renewable energy transition, but we won't necessarily, solve the climate problem because, as I say, energy demand is through the roof.
Now, David, you've already mentioned TPG Rise and Brookfield Asset Management. What about KKR, that other private equity giant?
Well, they're also getting into this global climate transition game, and again with Altera, which is an anchor of their global climate transition fund, which they've raised, I think, something like $3 billion towards their $7 billion target. And again, it's an example that there are opportunities, and particularly in emerging markets where there's huge need for capital, there's huge need for infrastructure, and you can actually get carbon savings there by switching them off of their coal plants and that sort of thing. So sort of on a dollars per carbon saved, and also possibly on a return on investment, the global south is becoming quite a bit more interesting to these private equity giants. So there is a bit of a shift going on. Emerging markets, broadly speaking, have been performing quite well in the last couple of years in stocks and other things. So one of the outcomes of this great shakeup may be finally getting some real investment dollars flowing to countries where that money is really could be put to good use.
Yeah, it always helps when, dramatic global events help prove out your original investment thesis, and that helps you raise money for that investment thesis.
Yeah, our friend Emmanuel Lagarrigue at KKR says he's never felt as good as now to be an investor in the energy transition, and he calls it a much more rational market, which means that valuations actually, because of the kind of pullback on policy, have been lower, and also some of the big investors like the U.S. government in the energy transition have gone away. So there's good valuations to be had and plenty of upside.
All right. Well, you can read Amy and Eric's piece on the rising demand for energy security, boosting some private equity giants on ImpactAlpha.com. There's also a link in our show notes. For now, we'll take one more quick break. When we come back, longtime climate science skeptic Peter Thiel invests alongside sustainable investors in a company generating clean power from ocean waves. Finally this week, sometimes investing makes strange bedfellows. David, tell us about the startup bedfellows, which just closed a $140 million Series B round in its efforts to generate clean power from ocean waves.
Yeah, bedfellows is a fun one. I saw them at Elemental Impact's Interactive Day a year ago. It's essentially, if you think of something like a bowling pin, really, that's turned upside down, is a kind of bulb in the water that you see that looks like a big buoy, but underneath it goes way down and it catches the energy of waves in the open ocean, and so it generates carbon-free energy out in the ocean from the wave action. The question is, what do you do with carbon-free energy out in the middle of the ocean? And what they are doing is building essentially data centers into these floating bulbs in the middle of the ocean, and then sending the signals up to the satellites and back to land. And so you never have to get the energy back to land. You just use the energy out there. And so think of floating data centers, in the ocean. I think Elon Musk wants to have data centers, circling the globe in his satellites. But you'll also have them floating out in the ocean. And it is true that ocean waves are considered kind of one of the biggest sources of carbon-free energy on the planet, but have been hard to harness for all the reasons you can imagine.
Yeah, we watched some video of this, and it's really impressive technology to watch it in action. But this investment has kind of brought together strange bedfellows, because the lead investor in this renewable energy company is Peter Thiel. He's the one that's called Greta Thunberg an Antichrist.
Yeah, probably, and I can't speak for Peter Thiel, obviously, but I don't know that he would consider it, a climate investment. bedfellows is a public benefit corporation. They're very keen on the climate and the low carbon aspects of their technology, but they're also meeting the demand, and particularly the data center demand for energy. And so you can be a clean energy investor now without giving a whit for the climate issue. And again, I don't know whether Peter Thiel does or doesn't, but this investment does have folks who do give a whit about climate, including John Doerr, and then also Lower Carbon Capital, which is Chris Sacca's outfit. Mark Benioff's Time Ventures is also in it. It's got a sort of who's who of funds, and some of them are climate funds, and some of them are just looking for ways to power data centers.
Yeah, I think that the interesting play here, too, is it's a way of increasing AI compute without the community pushback that some of the data center constructors are seeing in communities around the U.S. and certainly around the world.
And apparently, because it's out in the ocean, it also serves to cool the data centers, which is a big issue. And I don't know whether that means it heats the oceans as well. But it's quite, as you say, an impressive technological feat to be launching these things. And they've raised enough money now to start putting them into production. And so, this is just one of the sort of strange innovations that will be coming our way as this whole AI and data center build out continues. And the amount of CapEx, as they call it, going into that is just staggering. Something like $700 billion this year alone, and certainly more than $1 trillion next year.
All right. Well, you can read Amy Cortese's deal flow piece on bedfellows on ImpactAlpha.com. There's also a link in our show notes. But that's going to do it for this episode of This Week in Impact. Thank you, Brian. David. And thank you all for listening. This Week in Impact is a production of Impact Alpha and part of the Impact Alpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks, as always, to our producer extraordinaire, Isaac Silk. For the birthday boy, David Bank, I'm Brian Walsh, Managing Director of the impact advisory firm Human Nature. We'll see you next week for more Impact.